Monday, August 28th, 10:13 California time, a little bit after the middle of the trading day. This is Market Analysis, Stan Ehrlich, and I always start out with the indexes, so we're going to start with the S&P 500, and I'm going to talk about in some length this head and shoulder top that may be building in the indexes because it's particularly profound. If capital I, capital F, if this head and shoulder top, which is not finished, maybe not finished, building the last shoulder, works correctly, it produces a move down probably into October for the October lows. Now, that would be something else. I mean, last October's 13th bottom was the bottom of a head and shoulder bottom and the beginning of a bull market that we just modestly topped out at July 27th, only a few weeks ago. So here we go. June 15, 16, remember those dates, 16 usually. First shoulder high, minor dip, and then a rally. But there's kind of an inside shoulder right in here. And now I'm going to start to zoom in for you guys. And I'm going to click on it. Here we go. Good. Okay, so minor low. Now, inside shoulder took 3 days to develop, and up you go into new high ground, getting overbought, turning price action yellow. Minor reaction to the downside, certainly not quite. I was expecting something bigger because we were also in resistance, and I love that combination, but it did come down a little. But then it came back up into the higher area of resistance and did have a bearish engulfing ER sell signal right smack on top of the move for the S&P 500. So this vertical red dashed line is the depth of the formation, but we don't know it's a head and shoulder yet. We're coming down out of resistance with a bearish engulfing that did catch for an ER3 trade. Great, all the way to oversold on August 18th, only a week or so ago. And for 1, 2, 3, 4 days or so, we rally with a bearish engulfing last Thursday. I think might be the inside shoulder that matches the June 30, July 3rd, and July 5th rally highs. The prices are right. The timing is approximately correct. Maybe a day or two late, but that's not that big a deal. And next week on Monday is the time frame to match the outside shoulder, more important rally high, date June 13th, number of days to the top of the market, July 22nd, same number of days to the right, lands you 1 week from today in the future. If all of that pans out, which is quite a bit to ask for, and I'm saying we're going to go sideways for a week. And that's probably the hardest thing to call for a technician, for not to go up or down. So if this is an inside shoulder, it's a bearish engulfing with no downside follow through yet. But remember, there's a tendency to come back into approximately the middle of the range of a bearish engulfing in the first place. We did that on Friday, but it's following through more than I would have liked today so far. We're up 2.6. The DIA is up 2.3, and the Qs are up 2.4. So all of them are up 2 point and a change. And I don't think that we're going to be seeing any more rally of any significance in the next week because I don't want any rallies above the high of last Thursday. Now, it may, but if it does that, it's got to die real quick, drop down quickly. I can't afford to see it go sideways anymore, maybe to the end of next week at the very most, and not much, if any, above the high of last Thursday. So you've got some time frame to work with and some price range to work with in terms of watching for last little bump rally highs. And that'll be the outside shoulder, and down we go. Now, that commentary basically applies across the board, of course. I'm not going to get a big move, which is almost exactly a 50% Fibonacci percentage retracement from the lows of October to the highs we saw a month ago. That's all I'm talking about. Now, it's a lot, but that's not unusual in long-term bull markets, which I think we're in. So here it comes. I think it's going to give investors, long-term traders, a really good opportunity. Seasonal October lows, downside objective being fulfilled, Fibonacci retracements on a longer term scale, a lot of technical support in those ballpark price levels, a lot of reasons to believe that this looks like a very viable top formation developing. So, and the DIA, yeah, inside shoulder 2 days ago, Thursday last week, trading days, a bearish engulfing, which at the time, so here's a twist, which at the time looked like it was already breaking out of its neckline to the downside. But I'm sure I mentioned the fact that the last shoulder looked awful feeble and not very well developed. And you don't see a last shoulder high and the breakout happen very often in one day. But I have seen it. It's just very rare. In 52 years, I've seen practically everything. So now what I do is I take the neckline and I'm saying, okay, Friday's low now looks like the viable low, and that was the inside shoulder. The line doesn't really do too much of a change angle-wise, and now I've got a slightly lower neckline to work with, and price range up and down between neckline support and last inside shoulder rally high. But today's rally high is already testing that inside shoulder high, so the timing is the same. Next Monday, allow for a little bit more strength, but we've seen a lot of changes in which index becomes stronger and weaker in the last months, and I'm not going to be surprised if the Dow doesn't go flat more easily. QQQ, bearish engulfing on Thursday. That is almost exactly the right price, almost exactly, for the inside shoulder and or the outside shoulder, and it happened with a bearish engulfing, no less. So this little bounce back up in the triple Qs is nothing out of the ordinary at all. What I need or wish for is a sideways week. Get a little bit lower than last week's lows, but don't break the neckline. And then, toy in a week with 372. Let's see what happens. And lastly, the Russell is not quite in the same ballpark at all. I just think that the shoulder, if it develops, is not going to do quite what it looks like it could do. So the Russell has huge support for a very long period of time under the market. And this pattern would drive it probably down to all the way to the lows that we saw in June and October of last year. So it's possible. We'll see what happens. There's also huge support at higher levels, and there's a gap to close. I think in a couple other indexes, I'll mention it again later, gaps to close as well. Let's go to bonds. We're looking at, here we go. That 88-day cycle low and the cycle high, maybe 2 days late, happened last Thursday on a bounce. And at this particular point, I'm looking for modestly lower lows, chewing its way down. I still think interest rate futures, 10-year notes and bonds are building long-term bottoms. So I'm watching to see how they develop. So I have to be modestly bearish slowly in interest rate futures at this particular point. Let's look at the next chart, and I think it's going to be the E-mini with the head and shoulder depicted. Yes, it is. So again, June 16 shoulder high, inside shoulder around 4th of July. The top of the formation has not one, not two, but three bearish ER sell signals at the top in the E-mini. One day too early. The next one is the high day and the highest bearish engulfing red sell signal with entry available for the next 3 days if you chose to sell short. Our system got short the next day, little loss, and boom, starting to make money, and then on your way down we go. Approximately the same profit and dates and timing for the entries and exits on the E-mini that we get on the Spider as well, of course. So Thursday of last week, inside shoulder, question mark. Now I've got just you guys a marking here for the possible last outside shoulder. So September 4th is the middle of that little arch. I leave 1 or 2 days early, 1 or 2 days late for approximate lack of exact timing, which I doubt is going to be very exact. You never know. So here it is in advance. The minimum downside objective on this pattern is down to 4,073. So, and that is in the range of just a second, let me reset the scaling. The 50% retracement is 4,004. So it's not all that 4,000, let's call it 4,000. Not all that close to the 50% Fibonacci, which does not have to happen. So maybe the minimum downside objective may not even get reached. It is a minimum and it's an expectation. Most of these patterns, when they work pretty decently, do get to their objective. And I keep saying minimum because sometimes they go a lot farther. Sometimes. Something to keep in mind. Next chart is NASDAQ. I didn't draw the shoulders in for you, but it's obviously about the same. Our sell signals are involved in the top formation, not the highest high. Next chart is bond futures. We've discussed that. And the 10-year notes, I don't have too much to change. Crude oil sold the top. This little bounce, I don't think is going to go anywhere. I don't think we're going to get back up to the red area of resistance again. And I do expect to see it drop off below 77.50 probably this week, sooner the better. So I'm looking for really a move down to 73. Next chart, heating oil, overbought condition. I'm not yet convinced that that was a top of major consequence. I need to really start closing below, say, 3.056 and lower. So reserving commentary, but looks toppy because of the overbought. Next. Got a sell signal slightly after the top of natural gas. A little rally in a generalized resistance this morning, but it couldn't hold, is now well below where it opened, closing an opening gap, by the way, and now running a risk of losing even more strength. And if it closes below Friday's close, that would not look good. I'm expecting new lows for the next couple of months and a test of 2.3. Yeah, 2.4. Next chart. Gold, silver, platinum, copper. We all of the metals hit the bottom. Gold, lowest low, bullish engulfing, ER buy signal today. Highest high for the trend up, not holding its strength that well at the moment. And I certainly don't want to see it close lower than Friday's close. I'd like to see it hang in there and actually come back up a little bit, more the better. Looking for a little bit higher levels. We're not very close to overbought, so I think there's more upside potential. But it could be getting a little fragile, so to speak, here. Next chart. We have a whopper of seriously good profitable trades in silver this year. I'm telling you, I am just loving precious metals in general this year. We caught the bottom of the move back in March. Period. We caught the first high of a double top. We caught the second high of a double top. Down we go to a buy signal on May 26th. Rally, unfortunately, no signal, and a break to oversold at support, unfortunately, no signal. But the next rally, we have a sell signal on the top with a complementary all the way down to the bottom of the break only a week or so ago, and we caught the bottom during this rally. Today's an inside day. Looks like a relatively steady close. I don't want to see any more weakness. Our trading system, the way it's coded at the moment, and it has flexibilities. You can change it to widen your stop if you wanted, or even tighten it up for that matter. There's pros and cons to both. But we are stopped out with a damn good trade on the long side from the day after the bullish engulfing bottom. Next chart, platinum, we got the bottom almost to the exact day, bought the low the next day almost exactly, and has never seen red, losing equity. And today is a new high and a new high close by a long shot. Love platinum today, but it's getting overbought. I'm getting ready. The system should be getting ready to take profits. Next, high grade copper. Kind of stalling out here for a few days. Got a rally high, pull back to about the same levels on a closing basis. I'm looking for a little more strength, and guess what? We bought the low day and sold the high of the rally. Next, soybeans. Now, this is very, very important. We're developing something here that's very profound in terms of the resulting breakouts down or up. For the moment, we just got overbought today in soybeans, and we have an upside exhaustion gap, maybe. You really can't tell those things until a little bit after the fact. But this looks exactly where it should form. Some resistance at the relatively high of the day, and overbought, and not holding very well around where it opened, plus the gap to come down and close. This could lead to an island top. That's how they start. And tomorrow, if you gap down below today's low, you will have an island top in overbought conditions at resistance. Very bearish, usually. So I had to say it before it happened, if it happens at all. They're not that common, so probably won't. Next chart is bean oil at resistance, now down on the day after making minor new highs, looking for a move down into my support area 59.12 to 58.20-ish. Could be building a better, bigger, larger top because it's a double top. The high a week ago was almost exactly the same tick as the previous high a month earlier. The support level, if it's broken, will cause a downside breakout of a double top formation in the next few weeks. Next chart, soybean meal. Has already rallied into resistance on Friday and today, and simply come up a little bit higher into a resistance area where it's topped out 3 or 4 times in the last 4 months. Why won't it do it again? Until proven otherwise, it's making a high day today. Next chart, corn. A little resistance on this rally, could be a little bit more short-term, looking for lower levels. And this could be very bearish, very long-term, because look at this. It was a few years ago, we were way down. We couldn't do this. Oh, I see what happened on this. This is a perpetual, so you can't do that. Let's just look at the formation, and making new lows for over a year is not good for any market, and I think it's going to do it. Next chart is wheat. Looking for wheat to make new lows, which it already has started to do today. Today's low is just a little bit in the new low ground, very small amount. It doesn't look like we're bouncing back very well either. But keep in mind, wheat is already at very low prices historically, and we're not really likely to see a lot more downside move. Next chart, cattle. Interesting situation. We're breaking a minor bear trend line, but it's a very minor one. But it's across the head and the shoulder of a head and shoulder top that is in jeopardy now. We're just about as high as I can afford to get on this neckline testing situation. It is some resistance, and if it does turn down without going above on a closing basis, the blue line, the neckline, that line, okay, a little bit weird, but it's following the rules. Minimum downside objective should be 171, and that's the minimum, so you may look for a move even lower to 166. But cattle needs to turn down right away, or it's jeopardizing the bearish head and shoulder pattern, which looked pretty good and started acting out pretty well too for a few days. Next chart, lean hogs, new lows recently, a little rally back up to resistance, should turn down. Major resistance is overhead. Next, OJ, bearish engulfing today, outside down day. I'm not getting a red sell signal because it's not overbought within the allowed number of days. But I do like bearish engulfings from a bearish standpoint. So I think it's about to make new lows for a couple of weeks and keep going. I'm expecting a test of 288 without much problem. Next, cocoa. Is this really going to develop a head and shoulder top with a double shoulder also? That's crazy. The first shoulder could have, would have, should have been July 3rd. Cocoa has a bearish engulfing on the high day. We sold the top. The head also, the middle of the head also has a bearish engulfing, but that was part of the top formation so far. You do have an inside shoulder like over here. So that's working. And is this in the process of developing the last shoulder high? The price is approximately correct. Not, here a little higher, but okay, very okay. And the timing is about right also. Got to watch this one very, very closely. Next, coffee in resistance, looking for it to turn down, looking for new lows because the trend is down. We did buy the last low, and it did result in an okay rally for approximately 4 or 5 days. So that's proven to be good. As to whether we've fizzled out in resistance with the trend being down, looks quite plausible. I am thinking we might be headed toward new lows. Next, sugar, now overbought. My story about getting down to 20 area is not totally dead because of the resistance that it's getting overbought into. It still might be developing some sort of a top. I see a little rhythm in here. 1 high, 2 highs, 3 highs. One of these might line up pretty good for, and maybe even 5. Yeah, down there. Okay, got to look at that later. Next, cotton. Resistance produced a bearish engulfing on the first high into resistance. Second high simply stopped in resistance and turned down some. Didn't follow through. That's interesting. Here we have a higher high today than the last week and a half or so, but just barely snugging up against resistance, just a little bit, and closing lower on the day. May be good enough to produce a break of the support level at 83.28. And I'm not even going to bring up the topic of this pattern at the moment because it's a little too weird to see so many of them. Next is E-mini. Thanks for your attention today. You have a great day.